At its meeting on monetary policy today, the Monetary Board decided to raise the interest rate on the BSP's overnight reverse repurchase facility by 25 basis points to 3.5%, effective Thursday, 21 June 2018. The interest rates on the overnight lending and deposit facilities were likewise raised accordingly. In deciding to raise the BSP's policy interest rate anew, the Monetary Board noted that inflation expectations remain elevated for 2018 and that the risk of possible second-round effects from ongoing price pressures argued for follow-through monetary policy action. Although inflation expectations remain within the target range for 2019, elevated expectations for 2018 highlight the risk posed by sustained price pressures on future wage and price outcomes. Equally important, while latest baseline forecasts have shifted lower for 2018 to 2019, upside risks continue to dominate the inflation outlook, even as various measures of core inflation continue to rise. Moreover, the impact of international oil and commodity price movements on overall inflation is expected to be stronger given prevailing robust aggregate demand conditions. Given these considerations, the Monetary Board believes that further policy action enables the BSP to reinforce its signal on safeguarding macroeconomic stability in an environment of rising commodity prices and ongoing normalization of monetary policy in advanced economies. The Monetary Board likewise reiterates its support for carefully coordinated efforts with other government agencies in implementing non-monetary measures to mitigate the impact of supply-side factors on inflation. The Monetary Board also emphasized the BSP's continued vigilance against developments, including excessive peso volatility that could affect the outlook for inflation. The BSP is prepared to take further policy action as needed to achieve its price and financial stability objectives. That's the end of my statement. Thank you very much.
So we will now give the floor to DG Diwa on the inflation forecast for the request for the
Well, given the lower than expected May 2018 inflation, the DSP reduced its forecast for 2018 from 4.6 to 4.5%, and for 2019 from 3.4 to 3.3%.
3.3 go?
Yeah. Now, in the discussion of the monetary policy stance by the Monetary Board, there were four reasons given why 2018 is expected to remain elevated. One is the sustained robustness in economic activity for the second quarter up to the end of 2018. Second, the board also noted the positive base effects from June to August of 2018 because of the difference in the oil price assumption as well as the actual numbers on oil prices. In June 2017, for example, oil prices averaged only $46.47 per barrel. Third is the minimum wage expected to be implemented by October of 2018, and on top of that, based on the actual approvals by the wage boards of 5 to 30 pesos on average. And finally, the excise tax of tobacco, which is expected to be implemented based on schedule in July of 2018. That's about 2 pesos and 50 centavos per pack. Now, three reasons were also noted by the Monetary Board why in 2019 inflation is expected to decelerate. One is the expected decline in oil prices, that's for 2019, on the basis of futures prices, as well as assessment of the different forecasts of the IMF, for example, the US EIA, and other international institutions. Second, the world non-oil import price growth is also expected to decelerate. And finally, negative base effects from January to August of 2019 due to supply shocks on oil, food, and excise tax in January to August of 2018. Those are the reasons taken up by the Monetary Board that led to the decline in the outlook for 2018 from 4.6 to 4.5, and for 2019, 3.4 to 3.3%.
Thank you, sir, for that information on the inflation forecast. We now open the floor to questions or points of clarification from our media friends. Please be reminded to state your name and organization before asking your question.
Hi. Good afternoon, Gov.
Yeah.
Alicia from Bloomberg. You said you're prepared to take further policy action, and after the May 10 decision, which was 25, and then another 25 now, and you're still forecasting a 4.5% average inflation for 2018. Would you say that much more is needed, or how much more is needed in the coming meetings to bring to anchor inflation back to target in 2019? And second, have we more or less given up on 2018? I mean, you have accepted that 2018 is going to be a miss in terms of the target, and now you're just going to the objective now is just to go for 28 to bring back 2019 to goal. Thank you.
I think 2018 basically reflects what we have earlier described to be supply side factors that caused inflation to spike. And there have been developments since then. And as we are forecasting right now, our best expectations is that the inflation will come back to target by 2019. Nonetheless, this is a forecast, and forecasts have uncertainty around it. And considering that externally there are also uncertainties, so we're looking at a couple of things. BSP has always been data dependent in terms of its policy actions. That's also why we come back to review the situation and refresh our assessment every 6 weeks. So today we are announcing a further 25 basis points policy rate hike. That's basically informed by the latest data that have come to our information since the last meeting. So you asked, in my statement, I mentioned about the potential for further policy action. That is a statement that basically reflects our continued watchfulness. We will continue to monitor the data flow and see whether what we have done so far, 2 policy rate hikes, is sufficient to secure our return to target range by next year. So what you will probably ask, what is the BSP looking for? So obviously we're looking at the trends, and so far the trend seems to be positive, although as observed, the 2018 forecast is still above our target. There's no denying that based on the best available information that we have. And we're still looking out whether inflationary trends will further broaden and whether there will be second round effects. So this remains to be seen. Right now, the action taken, in our view, is sufficient for the information that we see at this point of time.
Are there any more questions?
Good afternoon, Gov. I'm Nick Flores of Nikkei. And during your last meeting, you mentioned that the 25 basis point increase at the time was sufficient to anchor inflation. So what were the things that you saw during over the policy horizon that warranted another rate hike in your meeting today? Thank you.
Okay, so on the more positive side, we see momentum seemingly slowing down. But at the same time, we're looking, as I mentioned, whether or not it's affecting other commodities in the basket. And there seems to be some indication, at the very least, it's not declining, but some additional commodities are there. So that's one factor to look at. And then we are monitoring petitions for wage hike and also fair adjustment, so which might be indicative of second round effects. Expectations are also rising. We're also seeing more volatility in the exchange rate, which potentially adds to the dynamics on inflation that we need to be careful about. So these are but some of the factors that we are looking at. It's still a very, as I mentioned in an earlier statement, it's still a fairly complex environment, and there are uncertainties. And what the BSP is signaling to the market is that, first and foremost, we truly put a lot of focus on hitting our inflation target. This year seems like it's no longer possible, but definitely we'd like to hit the target next year. And that's what we are prepared to do in terms of policy action.
Hi, sir. Melissa from Business World. Sir, in your view, has inflation already peaked? Or if not, when do you see that figure peaking this year? Thank you.
Diwa, would you like to give that a shot?
Yeah, based on the monthly path of inflation, we expect the peak to happen in the third quarter of 2018. I think this is much earlier compared to the previous projection that we presented to you during the May 2018 meeting of the Monetary Board. And I think this is also due to the fact that the momentum of inflation appears to be slowing down. If you take a look at the month-on-month, there's a very definitive trend towards slowing down of inflation. January month-on-month was 0.9, February 0.7, March and April 0.5, and May 0. If we decisionalize that, you will have a 0.7 January, 0.7 February, 0.7 March, April is 0.3, and then 0.2 for May. So it's slowing down. And that's the reason why we think that the peak could be earlier. But a lot would depend particularly on oil prices. Oil prices is a very important and very critical assumption in the projection of the BSP. I think we should also bear in mind that there are also possible mitigants of inflation down the road. If Congress is able to pass the rice tariffication bill, instead of sustaining the quantitative restrictions on the imports of rice, I think that's a very positive development. Based on the BSP's estimate, a quarterly decline in inflation could be achieved if the rice tariffication bill is passed by Congress. So it's about 0.2 percentage point. Also, if we see the Pantawid Pasada, which has been actually budgeted by Congress, being implemented earlier on, that would also help mitigate prices. But as the governor emphasized, the move of the BSP is really meant to strengthen the anchoring of inflation expectations which could have been affected by what people are seeing today.
Okay, so, is the mic with you, Dax?
That's Lucas of the Inquirer. So in previous episodes of high inflation over the last, say, 2 decades, the central bank had always emphasized that high inflation is a greater threat to the stability of the economic, social, and political arenas than, say, low growth. Does the central bank still believe this today?
These are not disconnected events. I think the way to look at it, Dax, is the mandate and the tools available to the BSP is primarily managing prices or keep inflation low and stable. In fact, our charter says price stability conducive to economic growth. So that's roughly what it says. And realistically, our assignment of responsibility to us is to keep inflation low, and we have the tools to discharge that mandate. Now, the concern from your question is that if inflation gets out of hand, then that will warrant strong responses that can come back to, in the end, whatever growth is happening could be aborted by the need to deal with inflation. Because at the end of the day, even if there's growth and if inflation is spiraling out of control, then if you measure the ultimate objective in terms of people's well-being, then that doesn't really quite answer. It's not responsive to what is good for our society. So we need to constantly strike the balance. But the BSP best operates doing what it knows, which is basically to focus on the inflation side. There are other agencies of government and the private sector who are engines of growth. So we have our complementarity of roles here.
I guess what I really mean to ask is, do you believe that the growth-oriented elements of the government are cognizant of the threats that inflation poses?
Well, the growth that the government is pursuing is very much in line with what its commitment is. And the BSP's role is to balance that out, to make sure that the growth is a sustainable one. That's the whole point of the effort. We want to see sustainable economic growth. And we are not working at cross purposes in that objective.
Any more questions? Could I see Warren's hand? Okay. Sorry, we'll have to bring the mic over to the other side, please. Okay, there's another mic. Okay.
Sir Karen Reuters. Sir, just wanted to clarify something when you said that you're seeing more volatility in exchange rate, which adds to inflation dynamics. What do you mean exactly? Because I think the BSP has been saying that the pass-through impact of the peso has been becoming less in terms of inflation. Are you talking about this in relation to also the, its impact on the widening trade gap, current account deficit?
Well, the dynamics that I was referring to is, the context now is we are actually in a way seeing a change in the global environment. And the dominant element here is the pace and magnitude of normalization, now clearly beginning in the United States, more recently being echoed in Europe, given the ECB statement to start unwinding QQE. So this developments suggest that the world is moving away from what it has seen in the last couple of years of fairly easy liquidity, of fairly lower interest rates, and fairly lower inflation. So the world is, in a way, is coming back to what it was prior to QQE, and we need to factor that in it has implications in the sense of for emerging markets like the Philippines of capital flows. So the consequence of that ultra low inflation environment was there was spillover of flows into the emerging markets. So there's that potential of those flows to come back to those safe haven economies. Although having said that, in the Philippines, we're still continuing to see positive inflows, and we're seeing more foreign direct investment coming into. Each country would have its own dynamic, and each country needs to craft a response that takes into account its particular situation, given the global environment. It's very hard to put every emerging market in the same bucket. I would say that the Philippines is in relatively good shape, given what's happening globally.
Okay, from Warren.
Yes, given that you are Warren is on ECB, and so given that you've already had two rate hikes this year, could you describe, because you said before that you wouldn't match the U.S. Federal Reserve hike for hike, but that's actually what's happening right now. How big of a factor that is that in your decision making regarding that, and considering also that the Fed is looking to hike at least 2 more times this year?
We have always asserted that our monetary policy action is primarily determined by our domestic needs. We're not matching the Fed hike for hike. The Fed has already hiked thrice. We've hiked twice. So that's not a matching thing. But what we're looking for here is that primarily we're focused on our own inflation dynamics. And that's really what's driving the setting of our monetary policy. But what's happening in the global market, it is not disconnected from what's happening in the domestic market. So we need to evaluate how it relates to what's happening here. So they're connected.
And an additional question, in terms of the interest rates, so it's I guess it's a benchmark for borrowing costs. How long does it take usually for, I guess, the consumer, the people at the bottom, to feel the impact of this on their interest expenses?
What's that mean?
It can be quick. Roughly less than a month.
It depends on the market conditions. It depends on the competitive environment. There are many factors to consider. As you know, but also part of what the BSP has been doing is really to do financial market reforms. And the key feature of that is a more competitive environment, meaning there's no single provider of credit. So every market has its own characteristics. So maybe some would be quick to reflect the increased interest rates in their lending rates. Some would probably decide not to reflect it for competitive reasons. So it's an empirical question, I would say, and I wouldn't generalize on it.
Do you have any more questions? Okay. So take one from Vitas.
Vitas Lotus from Bloomberg. Hi, Zol. Is a further reduction in the bank's reserve requirements still on the cards in the immediate future? I ask because the last time you raised interest rates, you followed it up with a cut in the reserve requirement. Thank you, Zol.
Yeah, one step forward, one step back.
The Monetary Board did not discuss that at all in this meeting. And don't you think we've been already very active? We've done 2 rate hikes and also reserve requirements. So I think that's enough for now.
You mean, Gov, is that enough for the year?
It's not something that the Monetary Board discussed at all.
Sir, follow up.
Please use the mic. Next.
Sorry. Thanks. Governor Das Lucas, does the EDF policy remain in place, market determined and all that?
The auction,
Yes.
the auctions will continue as it did this morning.
And the volumes and the non-intervention regarding the upward slope, that's in place?
Change. There's no change.
We haven't,
Making sure.
we're not this is an auction, a market-based auction, and the auction volumes are basically determined by our forecast, our team's forecast of what the liquidity requirements of the market will be. So that's the sole driver of what the auction volume will be for the week. That remains to be the case going forward.
Thank you, Rob. Are there any more questions? Okay na?
Last na lang on the
Okay,
peso.
sure.
On the peso, what kind of, measures or actions are you prepared to take to curb volatility apart from what you're already doing now, which is, I suppose, intervention every time it's needed, which is it becoming more often? Sorry, I'm digressing, but what kind of actions or measures can you implement in the FX market?
The BSP has a big toolbox. We will use everything in our toolbox to keep order in our domestic market.
And can you discuss some of the contents of that toolbox? Are there tools in that toolbox that you have not used for a long time or you've not used ever? Like a hammer or a saw? Or...
Jobo Bills.
No, serious yung question. Ba't hindi ka sumasagot?
The countries decide on the tools that they will use depending on the situation that they are facing. So it depends on what kind of what's driving, for example, the excessive volatility. So if it's speculative activities, then there are specific things that the BSP can do using not just only its sources, but its full regulatory powers.
Full regulatory powers, Gov, means you will come down heavily on banks found speculating. I'm trying to.
I guess we just look at the BSP's track record of what it does.
Sorry, Gov, just one more thing before before you get annoyed. But you have been stressing more and more lately about FX volatility and speculation. Are you seeing increasing signs of speculative activity or speculation in the FX market? That's why the volume of your rhetoric is getting louder on that.
Well, there would seem to be some basis for thinking that. And from the perspective of our main objective, which is to keep inflation low and stable, there is some impact of the exchange volatility on the mindset, which basically helps form inflationary expectations. So BSP cannot ignore these things.
Okay, thank you. Are there any more questions?
Thank you.
So if there are no more questions, this ends our monetary policy stance briefing this afternoon. Thank you for your time and attention. Salamat po.
Thank you very much.